Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIX Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIX. Learn more about SPIX at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, on the ever-exciting, at least we tend to think so around these parts, Options Insider Radio Network. Coming at you one final day here from the Southern studio, so if I sound a little bit different, that's why. It's always good to get to different locations, different samplings here on the network. We'll be back in the Chicago studio next week. Don't you worry, listeners. And of course, if you're one of the legion of on-demand listeners coming off the hottest month in the history of the network. And that's saying something. We've been doing this for 15 plus years. So a lot of folks discovering the network and the world of volatility. We want to keep that train rolling. So if you like what you hear, keep rating and reviewing. Clearly the new votes, the new ratings and reviews carry a lot of weight. So if you like what you hear, keep rating and reviewing. And of course, if you want to go above and beyond, today would be an excellent day to go over to the optionsinsider.com/pro because we got a lot of pro content coming at you pretty much immediately after Vol Views. We've got Options Oddities coming at you hot and heavy, breaking down the crazy week that was and indeed still is from an options unusual activity perspective. Going to have the Rock Lobster diving in, as well as our buddy Saad Hussein from Vesica, aka Shift Search, will be joining us to break down some of the weird unusual activity that he's found for us on the show. And then after that, immediately after that, if that's not enough, we're going to do a deep dive pro Q&A with Mr. Saad. So you guys are already hitting us up with your questions. Get them in if you haven't joined yet. theoptionsinsider.com/pro. Still time to get in on the action there for today. And of course, next week, it's already almost August. That means we're going to be giving away the July pro trading. Seems like we just gave one away, but if you want to get in on that giveaway, then of course, you know where to go, theoptionsinsider.com/pro. And let's see who's joining us on the show today. First, let's go out. Let's call it the Northern Volatility Mecca. For a while there, Google said it was the options trading mecca of the U.S., at least from a search perspective. These days, not so much, but it could still be the Northern Volatility Mecca, known as Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show, sir.
It is lovely to be back here on a sunny and not stormy day in Maine, although it was a storm last night.
You're lying. It's always dark. And we know the truth. We know you can lie all you want on this show, but our listeners, they're an insightful bunch. They see through your lies, and they know it is always dark and stormy. But nonetheless, glad you could join us on the show. And then joining us once again, holding down the MIAX hot seat, It has been since August 27th of last year. It's been almost a year since we've checked in with this person. I am very pleased to welcome back Mr. John Smollen, the EVP and head of exchange traded products and strategic relations over there at MIAX. John, welcome back to Volatility Views, sir. It has been too long.
It has. It has been too long, and I'm super excited. I think you're right. This is for this generation, those that have traded in the last couple of years, this is about as good as it gets. So exciting times. Excited to be on your show. Thank you for having me.
All right, John, before we dive into all the official vol stuff, it's been nearly a year since we've checked in with you. So we got to get your pulse, get the lay of the land here at the top of the show. It's been obviously an insane year since the last time we talked to you. The year kind of kicked off with a little bit of topsy-turviness, some concern over volatility. Then it really started trending to the dark side in February, of course, with the invasion of Ukraine. Vol started trending north. Market started trending down. The Fed kicked in and added an extra layer of insanity to everything. On top of that, we had inflation. So there's a whole bunch to unpack. Catch us up. What's been lighting up your tape, and what has been top of mind for you during this insane year so far, sir?
Well, I can give you two answers. I'll give you kind of an exchange answer, which is, where you guys hear it every week. We are building out our asset classes. We're building out our product list. We're rebuilding properties that we've acquired, the Minneapolis Grain Exchange. So all in all, we continue to march forward towards, each of our goals, and we're doing well, and we're getting there. From the perspective as a former trader and someone that still loves the market, none of what's happened has surprised me at all. Since March of 20, when the government had to figure out a strategy on how to deal with COVID, when you start spending money, inevitably there's a bill to be paid. The interesting thing, this bill came due as the war started, and you see what's appeared as how fragile what we think is a solid situation, where you see commodity prices and gas and oil, self-inflicted wounds here in the U.S., the war, and all of a sudden you have the bill for COVID, and you walk yourself into the perfect storm of a huge bear market. And then on top of that, you then throw in something that had never been seen before, which is watching crypto, billions and billions of dollars of crypto valuation just disappear, and a whole bunch of people that were, buy house, buy condo, buy beach house, now sell house, sell condo, sell beach house. And it's been fascinating. And now you see last night's earnings, you see Amazon, you see Apple, you see Roku, and this is a stock picker's world with Fed hikes. This is it. This is it can't get any better for option trading. So very excited for people in our business, and kind of jealous that I'm on the other side of the fence these days. But I love to watch the game, so it's fantastic.
Well, I'm excited that you're excited. It means we're going to have a fun show. So let's get to it. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was, and indeed still is. From a vol trading and trending analysis, unusual activity, all sorts of fun perspectives, and a lot of fun on the screen today, especially if you're one of the many bulls in residence out there, because these markets are surging north yet again. Apparently, everyone liked what Powell and company had to say earlier this week, because we have done naught but rally pretty much ever since. I mean, defy you to find another time in history where we've had back-to-back 3/4 point raises and the market rallying out of it. But that's where we find ourselves today, listeners, far north of the 4,000 level, 4,100 and change right now, up in nearly 43 handles on the day again, about 1.05% in the S&P. The NASDAQ up 1.3%, the Dow up 0.6%. So we are firmly in the green. All is right with the world. Yet again, listeners, all the concerns of the previous 6 months, they are behind us. We are marching north. That means all of our vol friends are looking a little bit lighter this week, or quite a bit lighter than they were this time last week. Spikes coming into the start of the show is at about a 21.30, puts it down not quite 2 points, about 1.8 points from where it was this time last week. VIX cash is at about 21.5. That puts it down also about 1.8 points. So VIX and Spikes moving pretty much in lockstep right now. VVIX, interestingly enough, right around an 80, about an 80.5. That puts it down nearly 5 points from where it was this time last week. You know, that vol of vol, that's starting to become a very intriguing area to watch because we haven't seen levels this low really since the start of the pandemic. So, you know, what does this mean? Are we heading back to a new regime for volatility? Are we going back to the more normal regime where we could trend down to about 75, hang out there for a little bit, then bounce off that? Who knows? Who knows what is in store for us? Another metric we like to use out here, another measure of vol, V-spikes, what we call around these parts, the Vikings. The Viking, I should say, singular. Also hitting a new all-time low. That product a little bit newer, obviously. Hit a 93 when we kicked off the show. That puts it down 5 points, and again, a new all-time low. I think our previous low was 98, so where we were last show. 93. So we're talking flirting with low levels again. That we have seen these levels before in VVIX, and then new all-time lows in the V-spikes. That's an intriguing setup out there. So now, with the table set, listeners, let's go out to the northern volatility mecca known as Maine. Mr. Rock Lobster, sir, what is lighting up your tape on this very interesting and perhaps head-scratching week, sir?
Yeah, I think we talked about this yesterday. Like, we're pretty much trading the highs of the week as we speak. It's making my ducks were looking really good on the opening. On the close yesterday, I'm like, I got this locked.
You have ducks now? You're raising ducks?
Yeah. Well, you remember I picked ducks for my vol.
Oh, your ducks prediction. Yes. I was trying to play some word play with you, but alas, no.
But clearly, I am dead from the neck up in any kind of nuance right now. So, and what is not nuanced about this market is they want it. Okay, so Congress is going to spend our way out. We're gonna kick the $1 trillion down to, of course, our children's grandchildren. Can't even think about it anymore, because it's all okay, and the market thinks it's all okay, and we're gonna have massive. So I guess there could be worse, but huge subsidies for anything solar, which is making me look. I've been waiting to buy solar stuff, so I guess this is a good time because the government will pay for it. To get totally off the grid, I guess, in Maine. So on balance, and they passed. If you would have told me a week ago that the government is going to spend $200 billion to the chip industry, who is last time I checked is not short of cash, but they're clearly taking this global supply chain crisis seriously, because like, wait a minute. We make all our chips in Taiwan. This could be a problem. So, it's probably not the best way to do it, but, if we're building more chips in the U.S., probably a good thing. At least Mexico or Canada, two of our satellite nations. I would be happy with North America. So, again, those are all, good things. And then the second part is, all the big tech earnings were not, I would just say, I believe the market was pricing disaster. They were pricing 100 basis points. I think that was the overall weakness. And we didn't get it. So I think when you were trading and you used to price disaster, right? You pump shit up. Children's show. You pump vol up. And then when the disaster doesn't come, you race to get it pushed down again. So, you can't. That's the normal way of things. That's how it works, and you can't get around that kind of pricing. So right now, what I would say would be a critical option. Let's just call it a critical option because I deem it so. So the 400 strike 2 weeks out in August is trading at a 20 volatility. So that's a pretty skewy option. It's right at 25 delta. So again, that's, not totally arbitrary pick, but it's trading at around a 20 vol. Now they're taking the vol in for the weekend. Totally get that part. However, it's getting down to you're getting the 2-week option is now trading well under the recent historical vol. So the market, at least the way I look at it, is the market is taking out those bigger moves. And generally, now that we're 4,100, the earnings are out. The Fed's not going to talk until September. Where does volatility go? Where does the SPX go? I mean, 3,900 looks like a million miles away right now. Like, you can't see that number for anything. Now, it is 2022, the year of surprises. So, who knows? Nancy Pelosi's going to Taiwan, I guess. Maybe she's trying to figure out what tips to give her husband for the next purchase. But at least right now, vol's going down. We're running, 60-day volatility in the S&P 500 is almost 28. And right now you're looking at the 25 delta put in SPX is around a 20 vol discounted for the weekend. So you're getting pretty low vol numbers now. And the market is looking for lower numbers. That number is about as low as it's been for that 25 delta option in a while that I can think of, at least through all the recent turmoil we've had. So, it's okay. So we're in a recession. We're not in a recession. Who knows? But at least right now, the market is pricing like those. It doesn't care. And the last thing I would say is you have, I believe, next week. So next week is the 3rd. So we have 2.5 full weeks for VIX. And yesterday when I looked at it, the 24 straddle was trading right around, right now the 23 straddle, the at-the-money straddles roughly are trading $3, $3 with 2.5 weeks to go. At around a 73 implied vol. So that's actually saying we can't even, we could settle below, a 20, but it's also, there's no upside bid anymore. Like I think the thing is the market is getting out of the panic mode, which is the only way I really can describe it. We were kind of at DEFCON 4 for a while, Zone 4 for a while, and the market's just getting out of that mode. Several things aren't going to change. The supply disruptions are here. Inflation is still here. The Fed is trying to tackle it, even though they were pretty clear that they're going to raise if they need to, but they're not if they won't. But if they don't have to raise and inflation slows down, they can stop the pace, which is what I think that was a surprise for the market. I think a lot of folks thought they were going to be much more hawkish, and that 100 basis points was a possibility. But if anything, for vol to go lower, it has to go lower. And that's where we are right now. So, if all those watchers keep an eye on spikes at the money, volatility, and that straddle, see where it's trading, because it's continuing to compress, not only because it's getting close to expiration, but also the vol of the straddle is just coming in and in and in. And skewy options are starting. Once those get into the teens, the market is past whatever this issue is. Now we're kind of back into a market of stocks, basically. And I think that's what John was saying earlier. Is like, those big macro issues, the Russians aren't leaving. Oil supplies are going to continue to be tight. There's this wild card with natural gas in Europe, but that won't be a problem until people actually need to heat their homes, which I'm sure is when the actual knife will be turned by Mr. Putin. But until then, we might have a month of maybe not much going on between now and the when the Fed next opines on what's going on.
Well said, sir. Mr. John, same question for you, sir. Obviously, a lot going on this week. You picked a good week to come back on. A lot of things popping off. We have GDP looking not so rosy. We have the Fed raising yet again, but as Mr. Rock Lobster alluded, perhaps not looking as hawkish as the market feared. So what was lighting up your tape this week, sir?
I'll just talk to you about our futures volume. We've had a few new players join, much more active. So we've seen our futures volume start to percolate. And I don't know if the team's talked about it. Launching a new vol product into the best scenario would be if we would have launched it into a kind of a slow market, which obviously we didn't. As vol gets higher, people have a tendency to stay with what they know. But so it's positive from our perspective that we get a couple new firms to join us. The trading starts to pick up. In the coming weeks, you're going to see a bunch of things that we think are going to be very positive for the vol trader, and I think it's going to be ultimately good for MIAX. And so we continue to grind along, and we think what we're about to kind of embark on is going to be very, very positive. On the market side, I agree with everything I just heard. It then comes down to where your needle points as a trader. Are you falling in love that this is the bottom of and the start of a good 10 or 15% correction, or is this just a situation where people are going to kind of lay flat through Labor Day and then come back for the fall and say, okay, there were less sellers in August, so the market went up, and now we've got the full team back, and the market begins to go back down. So that's a personal call from the trader, but I'm not waving the flag that all is good. Come on out and fire up the grills. I think caution, but I love that just picking up on the $3 straddle, because I love that. The straddle evaluations really tell you what's going on, and boy, that sounds like a pretty good spot to start for the next 2.5 weeks. I think there's a lot of value out of probably trading that market. So good pickup, and I like focusing on that number.
You mentioned the futures. I want to get there in a second, but really quickly, Mr. Rocklobster, before we get into the futures curve, I mentioned earlier we're in this interesting period right now from a vol perspective. In the old days, in the before times, when VVIX started getting to around this level, certainly by about 75, that's where we would start saying, okay, vol is kind of low. It's poised to pop. Viking, we haven't had as much of a history with the Viking, so we're at a new all-time low for that product, but we are starting to flirt with those levels again, where it kind of makes you stroke your chin and say, Mr. Rocklobster, what are your thoughts on VVIX and the Viking now getting at some levels where perhaps things are starting to get interesting, sir?
All I know is when the MIAX comes up with the cool swag for the Viking, like the Viking dude, with the hat and the horns, I want some of that. I feel like I have helped participate.
Shelley has already put the kibosh on all Viking.
Some strange degree.
Viking swag.
I love the Viking name, and I just thought something burning would be more appropriate. I like that. We've conquered and we're moving on. Burning house, a boat, but we'll put that in front of our committee. We're an exchange. We have a lot of committees. We'll put it in front of the committee.
You see, when you talk to the man, things go right to the top.
Things happen. Things happen when you talk to John. Things happen.
That's what I like. So anyway, I will wait patiently for my Viking swag if it. However,
okay.
In the in the meantime, vol, of course, is these indicators are always, what are they measuring, right? They're measuring the call over the put, or VVIX is the VIX calculation on the SPX, that type of calculation. So the fact that these implied vols are so low is, you're right. You're like, okay, like I have no problem buying this straddle for $3, which I'm bidding for currently. But I'm being patient. And I mean, just lucky enough, I haven't had to suck on all the vol coming in from where it was 2.5 weeks ago to here. So, I mean, another reason why volatility gets to where it is inventory. somebody somewhere, is kind of gobbling, if they owned a lot of upside, they're kind of eating it. And if they own some puts, they're probably maybe breaking even straddle wise. But even now, that let's say the 30 straddle in August is $7, a little like $7.50. And I know like 2-3 weeks ago, that was probably an $8 or $9 straddle. So there was very little exit for on the upside. So, the hardest thing for volatility products is one direction. It's great for the S&P 500, right? When you want to trade trend, but volatility in one direction is bad for the vol products. As a vol product trader, I know you're just like, okay, here we go. There's because you don't if you like trading the strangle when they look a little undervalued, you don't really have the chance to dump your upside. And this is definitely a not being able to dump your upside over the last couple of weeks because we didn't really get really much response. So I think people are complaining about what vol is and the indicators, but they got to realize that they're pricing exactly what's going on, right? You're sliding down the curve, you're sliding up the curve, you're not really having aggressive moves in vol, although today it does look like vol per strike is definitely coming in everywhere in the S&P 500, so that's all going to work down to the Vikings and the VIX. So you have vol actually, coming in. Now, what I say, is it a buy right now? Definitely worth nibbling at this level. Because, and I really think the reason why is because we could have a break to the bottom because of, if nobody gives a damn, that's how vol gets lower. And if the S&P 500 is now above 4,000 and it's kind of had that race from the bottom to here, now where are you going to go without more news? Like now you need good news, I think, which has been a little short. It's mostly we've gotten here just because the news isn't more awful. But, I don't think $3 is unreasonable for the 24 strike. You look at it, 24 strike is a little over $3.35 or something like that. And it's $2.70 in the money to the cash. So it's an easy way to ride a short delta in VIX right now, if you wanted to, buying a straddle. So I think that will attract some buy paper. And it wouldn't surprise me if this was somewhat where the bottom is. Just depending on if we get any movement. But, every half a point in these products now going down is going to be a hard one number because we need contraction in S&P 500, option premiums. So if for listeners, the easy way to kind of look at this is look at the S&P 500, go 30 days out and price the straddle, right? And then you say, all right, how easy is it? And my contention has been that $200 straddle for the last 3 or 4 weeks, it was trading like 220, 240, like right around there, 30 days out. That's probably pretty fair. Now, we had an amazing move since Wednesday. Amazing, right? Literally the whole straddle in 3 days. A 1-month straddle made the move in 3 days. So right there, the straddle is underpriced right now. That's the content. It's totally underpriced. Right now, the at-the-money straddle a month out is $170. So again, you have to look at how traders are pricing this. They're not stupid. And the at-the-money straddle is $175. So they're not looking for 4,400 anytime soon, and they're not looking for, they're not looking even for 3,900 in the next month. So that is a huge, again, this is this is about $70 lower in the straddle price from only 3 weeks ago. Pretty huge contraction of vol. So, I think it's kind of fairish at this level. And I think we'll probably see that straddle go to 150 in 2 weeks, just because if there isn't some disaster where we sell off again fast, it's going to be hard to convince people to start paying a 20 vol for options if the S&P 500 runs out of gas. And with all the major earnings out and the Fed being done, you need a vol catalyst at this point, at least for the next week. So don't be surprised if you see like somewhere below 20 by next week, which of course we have to wait for the crystal ball. So that's kind of where I'm pricing that low VVIX. There's a reason it's low, just because the downside is just going to get here so slow.
I love it when we're already 30 minutes into the show and we haven't even gotten to the futures yet. You know that things are interesting. There's interesting stuff afoot out there in the vol market, listeners. Let's get to the aforementioned futures now. Coming into the start of the show, we had folks coming once again for the front portion of that vol surface. The AUG future was down over 2.5 points. Man, they are just crushing that front end of the curve. The SEP future also down over about 2.1 points when we kicked off the show. There still is, of course, that nice little premium, that nice little blip, which is a little over 3 points, about 3.1 points right now, out to the November future. We've discussed it before for obvious reasons, folks pricing in a little bit of kerfuffle around that midterm election period. But outside of that, they're coming for this vol. Of course, you get out into next year and not next March, and they're pricing it about a 28 again. So they're perhaps pricing in a crazy start to the year again, which for the last few years, if past is prologue, we have seen that literally every year. So we've keep asking for a quiet start to the year every year. The vol gods mock us. John, you were just talking earlier about what's cooking in the land of Spikes futures. I know you guys have a lot of different irons in the fire over there right now. What's the latest on Spikes futures, and what can we look forward to? And if you have any thoughts on how this vol surface is shaping up right now, sir, as well, have at it.
Yeah, no thoughts on the vol surface. That's a young man's game. But I think like I talked about, we've added, we've had people joining who want to trade the futures. We've got a good roadmap of things that you're going to see us do to support the product. Both from the market maker side and from the customer side. So I think the next 8 weeks are going to be positive for, like I said, for the vol universe and especially for MIAX and Spikes futures.
Mr. Rock Lobster, same question for you, sir. What's catching your eye as they are just annihilating the front portion of the vol curve, sir?
They are, because for exactly the reasons that I outlined. The lower the front goes, the higher the forward vol goes, the higher the futures go. So the more all the short-term vols dive, the higher the forward vols go, and all the future prices get jacked up sky high. Again, perfect time for like a VIX put and an SPX put spread or put fly or some kind of combination like that. Mine have been running slightly down since the beginning of the week, mostly because we've been up 200 points SPX. So I don't think my vol portion will catch up until next week, just because the rally has been so stiff. But at this level, now you have huge potential in that trade. So we probably have, and this is a time for Russell, but I believe I got to look at my indicator chart here. I think, we are at the deepest contango in at least 3 months for sure, possibly for this year. So, and it's the best setup for a vol crush, in my opinion. Everybody's like, oh, we were just 30 and everything was going down. I mean, you have to trade what you see, right? You could think we're going to recession, or you don't like policy or all that. None of that stuff makes any difference if you're trading. The only thing that matters is what's going on. And right now, 9-day volatility is 1865, reduced for the weekend. They're pretty much taking the weekend out of the short-term options up at this point. So you're you're a full 5 points over. The August future is 5 points over that number. And that's usually a recipe for just destruction in the vol products. And, where vol product puts and VIX and spikes can pay. So that's as much as you might not think that's what we have. That's what we have. I mean, UVXY is decaying at almost 50 cents a week now, under the steam we have currently. So that's, even though the product is only down to $10, I guess we're going to be splitting it relatively soon now. I guess we'll get to that section, but still, that's almost 5% a week. That does not bode well if if you want to load up on long vol. You can do it, but you're running into a bit of a buzzsaw with where the futures are.
Buzzsaw indeed. Let's see if we got a buzzsaw cooking in the vol options right now. Spikes, we got all those July pars we used to talk about, spike options. Those are now off the board, unfortunate listeners. We got somebody playing in the AUG 30s, though, which is a surprisingly reasonable strike given what we're going to talk about in VIX options in a few minutes here. Of course, we're all waiting for those ETPs to go live on the Spikes products. Then I think it will be an interesting time to discuss what's going on in the futures and the options and, of course, the ETPs, because then you have all three legs of the stool all firing off at the same time. And that's, as we've seen in the past, that's what makes a vol ecosystem. Let's head on out to the VIX options right now. And they're kind of shrugging their shoulders right now. They're doing some paper, not nothing, but they're also not blowing the doors off today, which, again, it's a strong rally day. Not usually the recipe for a lot of vol paper, and that's kind of what we're seeing in VIX options right now. 280,000 contracts on the tape in VIX right now. The ADV continues to go in the wrong direction, listeners. 447,000. It's down another 8,000 from this time last year. Well south now. Not even of the 500,000 level. We're south of 450,000 a day right now. Once you start breaking down the action, such as it was from this week, you're going to see why. Interesting side note here. We always talk about the breakdown of the top 10 size positions in VIX options. And right now we're looking at a bit of a unicorn, a bit of a rare, unique period where we're just talking about how they're coming for this vol and how they are annihilating everything. And they're just crushing the front portion of the futures curve, the most aggressive contango we've seen pretty much this year, vol anemic. And the entirety of the top 10 listeners, for the first time, I do believe this year, it may have happened one other time, I'll have to go check, but for the first time I can recall this year, we have a 10 for none, 10 to 0 breakdown here in the top 10, where it's all calls. We've had very heavy put periods here, but I cannot recall another period this year where we had all 10 calls. We've had 9 to 1 calls for a while now, but all 10 of your top 10 positions in VIX right now, listeners, are calls, and a lot of them kind of the crazy cakes calls. Cost you 141,000 contracts to break into the top 10 this week, listeners. That gets you to our first, and dare I say it, the most reasonable call we're going to talk about today. It is the AUG 30s. That's also in a distant in the rearview mirror, and yet, compared to the rest of this, it seems the most intriguing. 141,000 of those, followed by number 9, 142,000 of the AUG 75s. And here we are back at it, listeners, back to the far upside. Number 8, 142,000 as well of the AUG 35 calls. So looking a little bit more reasonable there. Number 7, 145,000 of the AUG doubles, aka the AUG 55s. So now we're looking kind of up there again. Number 6, $148 of the SEP 50s. Number 5, 158,000 of the SEP 75s. Number 4, 159,000 of the November 80s. So the 75 is not doing it for you. Allow me to humbly present the Nov 80s for number 4. Number 3, 200,000 exactly of the March 75s. Number 2, 212,000 of the Nov 70s. And number 1 on just a absolutely ridiculous list this week, listeners. Still, 223,000 of the AUG 75s. You know, we've been talking about this for a while, Mr. Rock Lobster, but it does seem now like every fund has just awakened to the majesty of the upside in VIX options, and they are just loading up. Can you recall, Mr. Rock Lobster? I cannot. Can you recall the last time we had 10 for 10, all calls, and pretty much all of them being in the, shall we say, optimistic strike range, sir?
I believe this has been a topic of conversation where I think when Matt was here last week, we talked just about, hey, you don't need VIX to go to 100 for options to expand in value, right? All the upside vol products, you just need the vol to go up because there's no product on earth where vol can go from 75 or 80 to 200 in like a week, like the magic of the volatility complex. So I don't, there's no puts in the top 10?
Not a one, sir. Not a one to be found.
Oh my word. That is quite crazy. That is quite crazy. Oh my gosh. So all I can say is the trade that I kind of like, the back spread. We're like, okay, funds are going to stay long. So what they're going to do is they can stay long enough, but they're just going to buy a bunch of junk VIX upside as a hedge and see if they get outperformance. And, as of right now, I mean, if you're buying stocks when, at those levels, and they thought maybe those clever ways they're doing the 1x2s and ways to kind of finance and all that stuff. So, I mean, if they had a long component, it's probably working out okay, because it allowed them to be buyers down there, and they didn't get totally crushed. They didn't get totally crushed buying the upside, especially because remember we saw a lot of that 1x2 kind of action. So those are just sort of collapsing into nothing. And you close them and then just do it again. So maybe just people are using the products. They're getting a little cagier with how they use those products.
I just would love to know what the inflection point for this was. Was there a presentation somewhere? Because we've all been around the vol space for a long time. And John, I want to get your thoughts on this in a second as well, because you've been around the vol space longer than all of us here. And very seasoned, very experienced. And, we know the vol space, vol traders tend to go with the flow. They kind of tend to coalesce around trends. In some years, it's all about the puts and harvesting that risk premium. Other times, it's the 1x2s. This year, for whatever reason, it is this kind of crazy upside. We know it's the 1x5 on the 75s, but it does seem like a fund, or probably at this point with so much paper, many funds have just awakened to this majesty of the vol upside. I would love to know what the genesis was. Was there a paper? Was there research done? Was there a presentation at a conference? What got everybody down this rabbit hole? I would love to know, but intriguing stuff. John, have you noticed this trend in the vol space? Like I said, you've been watching the vol space, trading in it for quite some time. And have you ever seen anything else like this where pretty much even your own product, even the Spikes options, for a long time, the largest open position in Spikes options was the July 100s. So it's just across the board. There's this just insane mad rush to get all the crazy upside they can get. Have you ever seen anything like this, John? And what are your thoughts that we are seeing it now, sir?
I can't recall. You're right. They do move. People do move in a herd. But the only thing I can kind of just, again, I'm just talking from 10,000 feet. This is the first time in a decade where you've had interest rates really move. And so, are people looking at that? I know that we're working with a bunch of different firms on vol and things we can do on the vol. That's, as you know, as part of my long title, that's part of my job. So, but just thinking, it's like, okay, how do you go out and what's the strategy? And, it's almost like, well, when you get to the bottom and you sell a put spread, and when you get to the top, you sell a call spread, and it's as simple as that. So that's kind of from the retail side. But why guys do what they do? It's almost like watching a television series out of sequence, and then you finally see it, and you go, now I get it. And I'm waiting for that show to pop up.
Yeah,
I don't get it.
We're watching like episode 10 of a show. We're like, what's happened before this? We missed all the beginning. But you're right. I would like to see the preamble, the prelude to this, because whatever the inception was for this, I would love to know. But let's go out to the vol. Like I said, not a lot lighting it up today, and we're kind of coming up against this. I'm going to speed through some of this, listeners. 280,000 contracts on the tape. The big dog today, the AUG 35s, 21,000 of those. And that's kind of about it for kind of anemic day. Yesterday, a little bit more paper on the tape, 383,000 contracts. The big two contracts yesterday, it looks like a 20,000 lot of the Nove 4060 vertical went up yesterday. And that was kind of the big dog, 18,000 of the AUG 25s. And then, not to be outdone, 18,000 as well of the AUG 55s. So you got to get some of that outlandish paper in there as well. Wednesday, a little bit more action, 411,000 contracts. In fact, that was our busiest day on a very anemic week. The most active contracts Wednesday, it looks like a 35,000 lot of the AUG 3035 vertical going up. Also about 30,000 of the AUG double, so maybe a bit of some of that action tied in there as well. Tuesday, 346,000 contracts. The big trade that day was actually decently sizable, 51,000 of the AUG 23 puts. So there were some puts trading this week, listeners, just nothing that could make it into the top 10. And then Monday, another quiet day, 280,000 contracts on the tape. The big dogs then were 14,000 of the SEP 35s and 14,000 as well of the DEES 20s. Going out to the DEES 20s. Let's go out to SVIX right now. 12 3/4 was where it was when it kicked off. It's up a wee bit here on the week, as you might imagine. We saw a little bit of paper going up out there today. It was 351 contracts when we kicked off the day, so kicked off the show, I should say. So not a lot of paper going up. The ADV is also trending in the wrong direction. It's about 787 down. 30-odd contracts. So SVIX not lighting it up. Worthy of note, I said this on the last show as well, the big position out there in SVIX right now, 1,384 of the SEP 13 calls. So we are flirting with that level right now. That is kind of intriguing. Beyond that, not a heck of a lot of paper to really sink our teeth into out there. UVIX, as we've said before, though, a little bit of a different story. UVIX, obviously, listeners, the levered product, doing 3,461 contracts right now, listeners. So a pretty active day. By the way, 1085 when we kicked off the show, down 3.25 points from where it was on last week's show. The ADV also ticking in the right direction, threatening 5,000 contracts a day now, 4,952, up about 500. The big positions out there, let's do a top two, listeners. We got to get rolling. 3,649 for number one of the AUG 13 puts, followed by number two, 3,014 of the AUG 11 puts. So a lot of puts lighting it up. In fact, it's 8-1 puts over calls in the top 10 in UVIX, listeners. In terms of what's lighting it up out there today, let's look really quickly, see if anything interesting is going up. We've got 665 of the AUG 14s. That is the big dog out there today. VXX 2110 when we kicked off the show, down fractionally about 0.2 of a point. VXX, that's a weird beast now. We've discussed it before. I won't belabor the point today. 63,000 contracts on the tape so far today. The ADV is actually up. It's up to 77,000, it's up 13,000. So maybe some folks are starting to rediscover VXX. Doesn't seem like it today, but hey, you never know. Crazier things have happened. We were joking before about these AUG 16 puts. They still remain the number one position out there in VXX. 110,000 of those bad boys out there. They were at a nickel a couple of weeks ago. I'm sure they're quite the cheap bargain right now, but it is still 10 to nothing, all puts all the time here in VXX. Let's go out really quickly to UVXY as well. Let's see, UVXY 1040. So that one's starting to get into the danger zone where they might want to think about reverse splitting that one. Usually UVXY hits the 10 handle. That's when they start thinking about reverse splitting. 1040 right now, down 220. Again, not surprising. We were just talking about how they are coming for the front portion of that vol curve. So when that happens, UVXY tends to follow suit. Doing decent paper today, 220,000 contracts on the tape, and the ADV surging up to 268,000 contracts a day. That's up 32,000 from where it was this time last week. In terms of the big dog out here right now, the July 13 calls. That's interesting. 17,500 of those, followed by number two, about 16,000 of the AUG 12 puts, and number three, 16,000 as well of the July expiring today 12 calls. Those don't seem like they have a chance, but crazier things have happened out there. Mr. Rock Lobster, anything catching your eye in the broad suite of vol ETPs this week? Could be UVIX, could be SVIX, could be VXX, or it could be UVXY, sir. Any or all of the above.
But just a little bit more put paper in UVXY. That's what I have been trading recently. Notice today, though, how it is just stopped going while the futures are basically, I think, what was it at 11:30 today? All fall futures stopped going down. They got the memo that the cash is going to crash for the weekend and the futures are not going to go anywhere, and that's where everything has stayed. So there has been some action on that front, a little more than in a while. So yeah, but I haven't noticed anything besides just, more downside puts trading, and some strikes are just lighting up around 20 for mostly for the VIX, like the VIX type products. Is like a bid for the 19s and stuff like that, but nothing. I'd say nothing that's really got me to say, oh wow, something's going to change. There's no kind of volume like that I could see.
Let's look really quickly. Speaking of volume, listeners, we just had Matt on the show last week. He is the keeper of all the earnings data, and man, we are in the teeth of it right now. Both John and the Rock Lobster saying earlier in the show that we were kind of in a bit of a stock pickers market right now, and that is reflected by earnings season. If you want the latest data in your hot little hands from our friends over there at ORATS, you know where to go, theoptionsinsider.com. And then click on the Options News and Articles tab. You will see the updated earnings move results reports. You know we're in it, listeners, when that has about 5 pages of tickers popping off. That's names that are popping off kind of as we speak and how they are performing. We have the earnings move report, which is looking ahead to how many names. There are many. We've got Alphabet this week, Google, all this stuff here popping off this week. We have the results. We have, of course, the season reports, which was looking right around 109% the last time we ran the numbers. So if every name moved exactly in line with their straddle, it would be about 100%. So we're actually a little bit of vol outperformance right now, which is kind of interesting. And the earnings trades, listeners, that report is on fire. We added quite a few new ones just in the last 24 hours. So we are currently monitoring quite a few long straddles, quite a few short straddles, and quite a few long calendars for your trading information and education. Again, all those reports, all available for free because we like you folks. TheOptionsInsider.com. Click on the Options News and Articles tab to begin your journey to the dark side as we go really quickly into a little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, but I'm not going to waste time on our question of the week. It seems like we know the answer to that one right now. You guys are all fading it, but it seemed like the answer was to buy the rally because we are rallying still. But I want to get this is an interesting question. We got this a couple of weeks ago, John, and this is a good one for you, so I'm glad you joined us this week. This comes from Dante. I like your handle, Dante. He wants to know, what impact do you think the SEC canceling payment for order flow will have on the options market and perhaps volatility itself? John, you've seen this space from many different angles, trading, market making, now, of course, on the exchange side. So you have a good perspective on what this could mean for the options and indeed the vol market itself. Dante wants to know if the SEC does follow through on their pledge to cancel or maybe perhaps change PFOF. What impact do you think that's going to have on options and volatility, sir?
Really, really good question. Something that we do spend some time on. So I think there's payment for workflow is obviously a sensitive thing. It's obviously a hot button. I think it's greatly misunderstood. But nevertheless, if the commission says, "Hey, this is the way you got to go," I think you're going to see exchanges and market makers work maybe independent of each other or together to see if there's a way and how they whether market makers come back and say we're willing to pay more and we want that cost passed on. Obviously, that's a route. Or if it completely disagrees, it's really what the second part of it is. Is it not only payment for order flow, but how does it affect the consolidator model? If the consolidator model goes away, I mean, first of all, right away, initially, it's going to create chaos. There's going to be a lot of moving parts. I think volume initially would go down slightly. But this is a question when I talk to people, I said, I don't trade for free. In my personal account, everyone says, "Oh, you trade for free," and I don't trade for free. I don't get PFOF. I still pay. I pay a commission. So I don't know if we're going to see like 20% of retail volumes can disappear, as kind of the panic people are saying. But I think it would take some adjusting. I think the market would figure out how to balance the cost so that the retail firms could, continue to do what they're doing. But I think initially small pop in volatility, small loss in volume, and then the market would figure out how to make it work.
All right, we have to figure out how to get to our last segment. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, you know what time it is. It is time to get difficult. It is time to get dangerous. It is time to predict where vol will be for the coming week. Let's pay off last week first. And, they don't call Matt the Oracle of New Hampshire for nothing. He's coming in hot this week with a bullseye. It's been a rare guest bullseye. I don't get a lot of guest bullseyes, but Matt crushing it. Coming into the start of the segment, spikes coming down a little bit from the start of the show, and VIX. Spikes was at about a 21.30, VIX at about a 21.25. Matt picked a 21.33, so he is pretty much right dead center. Very well done, Mr. Amberson. I tip my cap to you, sir. The Rock Lobster was on with us last week. He was on his infamous Ducks, 22-22. It was looking good until it wasn't, Mr. Rock Lobster. That shows how capricious this game is. It gives, and then it takes away very rudely right at the last minute. I was at 23.45, so no joy for me. Looking really quickly through our listeners, looks like Super VIX. I like that handle. He was the closest at about a 21.90. But alas, that's still 0.6 of a point away, listeners. So not going to get it done. But Matt, I tip my cat to you. Let's go around the horn then for this week. We've got myself, we've got Mr. John, and we've got the Rock Lobster. John, Andrew and I both failed last week, so we don't get the first choice. So, John, I will give you pride of place. Do you want to go first? Do you want to perhaps pick someone else to go first, sir?
I'm going to defer to seniority in town, so I'll go last.
Seniority in town. All right. Well, then he will go. He's smart. He knows how the game is played. So I was the worst loser last week, so I guess I will go first. I will set the tone. And again, 21.25. They are coming for this vol. Listen, I know I've been kind of resisting that trend the last couple of weeks. It worked out a few weeks ago, not so much the last couple of weeks for me. I'm still going to be kind of dragging my heels. I know the Rock Lobster is probably going to pick a below 20 handle here. I think for this time next week, I'm going to say 21.75. I think we get a little pop back into the low 20 range, and this is where we're going to be this time next week. Mr. Rock Lobster, same question for you. Are you going to dare to go below 20, sir?
I'm going to go the purple one. I'm going to go party like it's 1999.
1999. All right. You've been hanging out with the meatball too much with these interesting symbolic numbers that you are picking. All right, John, there's your market right now. 1999 on the dark side, 21.75 on the upside. You going to go in between? You going to carp us? You going to go outside? What are you feeling, sir?
I'm not carping anyone, and I'm avoiding that 1999 Prince market, and I'm going right to 22. I think there's going to be a bunch of stocks that miss, and people are going to get jitters. I am still I'm a guns and canned food guy here, so I don't believe this market.
Guns and canned food. I like it. Then you should be picking 30. You should be you're too low. But I see what you got there. 22. All right. So coming up a little bit north of me. So there's your marker for next week, listeners. 19.99 on the Prince side for the Rock Lobster. 21.75 for me. John coming in right above at 22. He's doing the guns and canned food market. I like it. All right, Mr. John, I'm glad we got you back on the show. We got to do it more often than once a year. Before we go, sir, if folks want to keep up on everything spikes in MIAX, where should they go? What should they do, sir?
Yeah, go right to us at MIAX.com. We've got a lot of good content in there. I heard later on you're going to be talking to our partner, Saad Hussein from Shift.
Yes, in about an hour, yes.
Yeah. So I think look forward to some stuff that we're doing with Shift that I think it's going to be very, very, this is really good for anyone that trades options. And he'll talk more to it, but he's doing some great stuff, and we like that. So, MIAX.com, and then, obviously you can reach anyone at MIAX through the website.
Options Queen in our chat said earlier in the show that she was glad to have you back on, John. And she also went at a 22. So it sounds like you got a fan. Because I'm not sure if she went in before you or not.
She's good.
Yeah, she's been very prescient. She's been smart. So you two might be on the right tip for next week. 2 of you at 22. All right, Mr. Rock Lobster, same question for you, sir. If folks want to learn more about what you have going, where should they go? What should they do?
Yeah, call Ted, 888-TRADE-01. If you want to learn about these vol products, if you want to buy something from our store that teaches you all this stuff, if you want live mentoring, understanding how all this options stuff works, come to optionpit.com, call Ted, 888-TRADE-01. If you say, hey, I heard him on this show, you get 10% off. There you go. You can't find a better deal than that anywhere. And mention something about Mark Longo just to make him happy. Just to make him happy. Because his ego needs to be fed.
Even at Option Pit, I have no association. Yes, my ego needs to be fed there as well. OptionPit.com is the place to go. We got to get on out of here. Listeners, for all of you on the on-demand side, this will conclude your broadcast week. Thank you for joining us. But of course, hey, what are you waiting for? Head on over to theoptionsinsider.com/pro. Today is the day you definitely want to do. You want to get in on all this action. We got options oddities coming up. You know there's a whole heck of a lot of crazy, unusual activity. What will we find? What will Shad from Shift Search bring to the party? Let's find out in a little bit coming up. And then after that, we're going to do a whole deep dive pro Q&A with him as well. So you got twofer of great pro content coming at you right after this. And then for everybody else, we'll see you back here next week, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIKES Volatility products. SPIKES options and futures are traded on the SPIKES Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPIKES at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.